Hello, I'm Tanya Krishna from Financial Express, and today we have with us Mr. Stuart Leslie, who is International Sales and Marketing Director at Barratt London. First question, Mr. Leslie, is how is residential real estate generally performing, and where do you see this segment going in next 5 to 10 years from now?
Well, thanks for having me, and I look forward to sharing some insight from the UK's largest home builder. We have obviously a great pool of knowledge and experience in the market, both in the UK and overseas. So we'll try to help you and your listeners and readers understand the market a little bit better. So just by way of a quick introduction, Barratt Homes is the UK's largest home builder. So we have a market cap of £6.5 billion, and we have over 400 projects live across the UK at the moment. As far as the residential real estate market is concerned, we're seeing extremely strong indicators, both historically and for the medium to long-term future. We focus predominantly in London as the international team. And what we're seeing is a lot of overseas buyers looking to purchase into the market at the moment for a couple of reasons that we'll touch on later on. But the overseas buyers are very active at the moment. The domestic buyers are also very active. Obviously, the same as everywhere else over the pandemic and the lockdown, there's been limited possibility to move home or to expand or purchase more investment properties. Now that all of the restrictions have lifted, we're seeing lots of inquiries, both for existing buyers wanting to either increase the property size or move into perhaps a location that has a better work-life balance, or investors who are looking to take advantage of the rental market at the moment. Right. And what we're seeing in the rental market is very, very, very strong performance indicators. So as an example, at the moment, the average time on market for a rental property in London is approximately 3 weeks, which is very, very short. And in fact, practically speaking, when we speak to our local agents who deal with the investors' rental properties, they're seeing multiple inquiries and offers on each property. So it really is a very, very high demand for the rental market. As far as the capital growth is concerned and the demand for residential property in general, we're still seeing historically low interest rates. Although they've creeped up slightly in the last couple of months, they are still very, very low. We're talking about around 2% or 3% for overseas buyers, which makes it extremely cheap to borrow money and invest in the market.
So, except for, besides residential real estate, what are the other real estate segments or asset classes that's attracting the takers today or the investors today, and why?
So as the UK's largest residential developer, we don't actually deal with other asset classes. But what I know is that the commercial market has been extremely volatile and has been very quiet over the course of the pandemic and lockdowns for obvious reasons, because retail and the ability for people to go out and about has been restricted. What we've seen, we have a very little amount of commercial spaces in our residential developments when we do mixed use developments, or we indeed want to bring some placemaking to our residential developments. The interest is increasing fast. But it's still a minority sector of real estate asset management for overseas investors, particularly Indian investors who still favour residential property as an easy long-term asset class for both capital growth and a stable rental market.
So if we compare, are Indian home buyers buying these properties for rental purposes, or they are living in those houses, buying and living in those houses? How is it? How are the trends really?
So the trend is from the Indian market that when they purchase residential properties, they either buy for pure investment, so they're just looking at the rental yield, the capital growth potential, and they're looking at it almost as a financial product. Although the reason why they're comfortable with purchasing into that market is because of the market fundamentals and the confidence and history of Indians purchasing UK residential property. I think that the reasons why they're interested in particular in the residential market is because they really have a trend of investing into residential property, whether it's in India or whether it's in the UK. At the moment, the suggestion looking at the exchange rates and the market performance, they're getting better returns from the UK and a safer investment than they have in more volatile markets like India or the UAE or the US.
Why are really Indians preferring to buy homes in England? And how does it compare with the home buyers of other nationalities in England specifically?
Well, Tanya, as you've just been in London, you can now vouch for the wonderful weather in London, which is in fact even better than the weather in Dubai and the US, because British summer, when it's a great British summer, it is warm, but it's manageable. Whereas the Dubai heat obviously is a little bit more oppressive and a little bit more difficult to deal with. But certainly from a residential market perspective, the UAE market is very volatile. So it's either going up very much or it's going down, or it's all over the place. Whereas the UK is a proven market over the last 60 years where it's increased steadily in value. So the fundamentals of the market are much stronger. I think when we compare the US market to the UK, and that's usually done in the context of education. So people are choosing where to educate their children or send them to university. They're choosing the UK just because of the travel time. It's so much closer than the US for either for students and parents, or indeed for investors to come over and check on their investments as well. So, yes, you'll always find people that will invest in other markets and other asset classes, but the UK market has always been a very strong, stable market long term.
In terms of nationalities, while you've seen a trend of Indian home buyers with Barratt London, in terms of nationalities, what other nationalities are showing interest in properties in UK?
So, as the International Sales and Marketing Director, I get insight from all markets, and we have historically strong markets like Southeast Asia, so Hong Kong, Singapore, and indeed mainland China as well. They're very strong investors into the UK market. But what we're more interested in is to see the emerging trends of the next strong markets. And India is by far one of the strongest markets that we see medium to long-term growth for people investing, not just in the UK, but overseas generally. So the other markets that we were seeing previously were also the Middle East. So particularly from Saudi, Qatar, and Kuwait. Not so much from Dubai, but Dubai is more the hub into those different regions. And we're also seeing some good investment activity from Russia, Ukraine, and Kazakhstan, Azerbaijan, and those markets as well. Those have obviously reduced because of the political instability there and the issues that are going on in the media. But we still see, people who want to invest in the UK because either their family have invested in the past or they want to send their children to school here. The fundamentals of the market still remain.
Are these home buyers residing in UK, or they are from these other countries and they just invest there and they're looking for returns on their investment through rentals or appreciation? How is it really?
Good question, Tanya. So really, outside of London, 99% of our product is sold to UK residential buyers. So people who live in the UK and who are going to own their property and live in it. When it comes to London, approximately 30% of our sales are to pure investors. Mm-hmm. So those are people who won't choose to live in the property, but will rent the property out. And out of that, approximately 30% of them will be from overseas market.
And in terms of percentage, if I may ask, what percentage of sales come from Indian home buyers?
So for London, it's approximately 7 or 8% this year. We have seen an increase in sales to the Indian market, which is why we've chosen to both travel to the Indian market. So we'll be attending IREX later on this month, September. But we're really reacting to where the demand is coming from rather than going out speculatively and looking for new business. So we won't go into a market unless there's a proven track record, decent sales channels, and an opportunity for us to establish our brand professionally and over a medium to long term period.
And in terms of, if we talk money, what kind of money are Indian home buyers willing to shell out for investing in these homes? And what are the general, approx rates of properties in London?
So what we're seeing is our sector of residential property in London is at the more affordable level. So the fundamentals and the values that remain in the company to this day, although it's now, a FTSE 100 company, in the billions of values, it's really about good quality, affordable properties for people to live in, whether that's homeowners themselves or their tenants. So because of those values, we drive more affordable properties in the capital, in London, than a lot of the overseas activity is promoting for London developers. So they tend to take luxury product overseas, whereas we take more affordable product. So our property prices will start from £390,000. Those sorts of prices, people don't necessarily associate with the London market. They normally associate it with second or third tier cities in the UK. But when we show them that they can easily afford a 1 or 2 bedroom property in zones 4, 5 or 6, which is an easy commute of central London, they immediately want to be London centric, London focused over the second and third tier markets. So our product average price is £450,000 across our London portfolio, but they do start from £390,000. And those drive rental yields of about 5%, 4.5% to 5% rental yield across the portfolio. Over the last 2 or 3 years, we've seen developers from the UK taking out product which is second tier cities like Birmingham, Liverpool, Manchester, and they're promoting high rental yield returns, so higher than in London. What people don't look at is, as an investor, the rental return is really not that important. What's really important is the overall return on investment. So how much money are you putting in and how much money are you getting back, not the rental return in itself. So when you consider the developers, they started selling and they did quite well, but what started to happen was the prices in these second tier cities started to go up and up and up. So when we go out with our product, which is more affordable than people realize in the London market, and we showed the investors that they could purchase a property in central London or close to central London for the same prices they could purchase in Birmingham, Manchester or Liverpool, they immediately became London centric and London focused. The other thing to consider is, if you take a second tier city such as Liverpool or Manchester and compare it to a suburb in London, just one suburb like Newham in East London has a bigger population than Liverpool or Manchester. So you consider that you've got so many more tenants to rent to, you've got so many more people to sell to if you want to sell the property in the future. London is just a much stronger fundamental market.
Makes sense. And you mentioned about return on investment. What kind of return on investments are home buyers looking at when they're investing in homes in London? Approx percentage.
So if you take into consider the historical price growth in London, so on average over the last 30 years, we've got public record of all of the transactions, and you can see the values going up year on year, 9.5%. That's the average over the last 30 years. There's been slight flattening of the market. So, for example, in 2008 with the GFC, there was a flattening of the market, but it never went down. Mm-hmm. And there, obviously, through the pandemic at the beginning, there was a flattening of the market. But what we actually saw was then a massive takeoff in values and rental prices as well. So if you consider that, then you consider, so first of all, if it's a cash purchase, the return on investment should be around about 12 to 13%. So that's based on capital growth plus your rental income as well. If you then consider that both Indian investors and all overseas investors have the opportunity to leverage the property through a residential mortgage, then the return on investment goes up exponentially. So it's not unusual to see return on investment of over 110%. So if you consider, for example, you're purchasing a property that's £350,000, sorry, let's say £400,000. So £400,000, you put down a 10% deposit on exchange of contracts, and that's the amount that you invest until the property is ready. So that property might not be ready for the next 6 to 12 months. So in that time, the capital growth in that market, the regeneration effect of our developments is ongoing. So the capital value is increasing. Yeah. So you can expect usually about 4 or 5% in that period. Obviously, this is not guaranteed, but this is based on our historical figures. Once the property rents out, then you're getting 5% rental yield. Your mortgage is costing approximately 3% as an overseas investor. Plus, your capital growth continues to expand as we do the regeneration, as there's things like Crossrail or infrastructure improvements going on around London. So it's not unusual to get upwards of 100% return on investment just because of all of the market fundamentals that are going on. But it boils down to, number one, safety of investment. So obviously the UK has a very strong legal background, and it obviously has a very strong performance historically, particularly in London, on price growth and rental yields. There's confidence in deliverability of the product from the developer as well. That's really important for overseas buyers. So what we say we're going to deliver, we deliver. We don't need to take reservations or funds from the customers to fund our projects. They're already funded. So there's a real confidence that when you're purchasing from overseas, the brand and the company that you're buying from is really important. And then you look at the market fundamentals, so the interest rates, the rental growth, and the capital growth as well. It really makes a lot of sense for people to consider London as an investment opportunity.
If we compare under construction houses as compared to ready to move kind of properties, which are more popular or maybe more sold in London?
So honestly speaking, at the moment, the trend is towards close to completion or completed properties. And the reason for that is that the reason people are purchasing is usually either for second homes, in which case they want to use them straight away. We've all been locked up for a while, so we'll want to get out and travel and come over and visit. So that's number one. Number two is education. And again, so the number of applications from Indian families to UK schools and universities has increased by 128% from last year to this year. So you can see that immediately, as soon as the opportunity arises, people are suddenly looking to either send their kids over here or their kids are interested to come over and study. So that's really fueling the inquiry for both residential properties for the children to live in, or for investment property to subsidise the income that's required to send them to UK schools.
There is this thing about Indians, we tend to buy a lot during our festive seasons. So we have our ongoing festive season. So do you think there will be a surge in demand for properties? Will it affect sales at Barratt London? How are you projecting the sales numbers there?
So I'll give you an example. One of our projects, High Street Quarter, which is in southwest London, it's very close to Heathrow Airport, and it's in a very strong Indian community. So the surrounding area has a lot of Indian families and businesses living there. And of course, when the season of festivities kicks in, then Indians know how to celebrate and come together. And when that happens, then people talk to each other and they say, oh, I've invested or I've moved into this development. They come and visit, and that really does drive interest in our projects. And I think people feel comfortable with familiarity. So if there are a lot of Indian families living in that area or in that development, then of course, sending your child to university, you want them to be surrounded by people that you're familiar with and that you trust. So that's also important as well. We also do marketing around the festivities as well. So we'll send greetings cards to our existing customers. We'll invite people into the developments as an example, for the Diwali celebrations. Last year, even post-lockdown, we had small events on site in our marketing suites and outside in the streets, and they were very well attended, and people responded to the invitations or to the greetings in very positively, and subsequently went on to purchase property. So yeah, in the same as any market. So in China, for example, at New Year, there's a gift of money to friends and family. People want to invest at that time, so we see an increase in activity from that market. It happens the same from India as well.
Finally, around your expansion plans and any upcoming launches, projects, etc., and also what kind of additional investments are planned for all of these expansion plans?
Okay, so first and foremost, we are acquiring more land in London. We're acquiring it strategically, so we don't see zones 1 and 2 in particular as coming back in the short to medium term. So we're buying land in locations where we can deliver maximum value to our customers. That's traditionally zones 3 to 5, and it's within 25 minutes commute of central London. What we've seen through the pandemic and through lockdown is that people are valuing a better work-life balance and a nicer lifestyle over convenience. So whereas people previously would consider their commute into London every day, now with hybrid working, they don't have to be in the office every day, so they're spending a lot more time at home, and they're considering, does it have green space? Does it have an area that I can use for working from home, like a small study area? And does it have facilities on site like a gym, so I can nip off to the gym and use it, but then be back for my Zoom call in an hour? So these things are really important and driving our decisions as to where we're purchasing. We have a project that's upcoming in Bermondsey, which is near to Tower Bridge. Okay. So Tower Bridge, London Bridge, very famous. The Tower Bridge is probably one of the most famous landmarks in the world. You will be able to see that from the top of our development, but also the development will be an easy walking distance of London Bridge, Tower Bridge, Borough Market, and then the city as well. We then have other projects that are large regeneration projects. So we're coming to IREX in Delhi on the 9th and 10th of September. We'll be there in person, so there'll be representation from Barrett directly, not through agents, and we will be talking to investors, giving our knowledge and experience so that they can make informed decisions. But we'll be promoting Hayes Village, which is a wonderful project in West London. It's an old chocolate factory, which is, who doesn't want to live in a chocolate factory? So like super cool. So it is a large project of over 1,200 properties. So we're regenerating a whole neighborhood. We've actually delivered about 20% of the development so far. So it's tried and tested. The other development that we're bringing is High Street Quarter, which I mentioned earlier. So that's in southwest London. And it is a fantastic community development close to Heathrow Airport. But again, it's on the Crossrail network, an easy commute into central London. So we will be bringing projects through both our channel partners in India and also directly to the Indian market. And we'll be hoping to meet and talk to investors and obviously families as well that will be looking to use the properties themselves.
And any kind of figure that you can share with us on the kind of investment that's planned for all of these expansion plans?
So we have a target to deliver 2,000 properties per year in the capital. We have invested in the last 18 months as a business, Barratt Homes, about £1.2 billion in new land acquisitions.
Okay.
We will look to continue or increase that volume of acquisition over the next 12 to 18 months. So we have a very strong pipeline of new projects that we're working on. And that's really driven by the market fundamentals of the interest rates, the rental growth, and obviously the good value for money when we're looking at overseas investors as well at the moment.
Right. That sounds interesting. And thank you so much for taking out time for us. And lovely talking to you. Thank you.
Great to talk to you too, Tanya. Thanks very much.